Good evening, everybody. All right, kind of general analysis on the market. This is and is a very effective indicator of where investor sentiment is. This doesn't look good, except for the fact that we're still above the T line and we're not in the overbought area yet. Just maybe some consolidation after this big move. So if we get another big pop here, which is not out of the question because with the Dow getting a little bit sluggish, we can see what's happening to the NASDAQ. They're still trading this one higher. And the S&P 500 also is holding up decently well. So the very simple analysis is that we know we're in an uptrend. That should be our first analysis based upon a breakout into wave 3, good strong buy signals. Here's a bullish flutter kicker. So the first criteria is which direction is the market going in general? And as of yet, there isn't any indication that they're selling it off. So you just gotta have to assume that as long as you're in an over the T line, you're still heading in the right direction. Let's see, what are some of the other things to look at? Crude oil, as you can see, still trading weaker. Still would suspect they're going to come down and test this level, which isn't that far away, but tells us it's not time to buy crude oil just yet. And gold, still heading lower. It was down about 12 bucks today. That may not be the right one to look at. And I guess that's the one that's trading, is the June contract. For those in the options and futures room, we will be moving our stop up from, I think we had it at the halfway point of this candle. Now we're going to move it up a little bit more just below today's low, the doji, with the prospect that if they trade it back down through that level, more than likely you've got a sell-off. Not that it's going to reverse, but it's probably going to at least come back down and test the T-line area. So we want to take profits. This has been a good trade. We got in right about here because we can see the J-hook pattern setting up. Had a couple of days that was up the limit. That's been a very good trade. The other ones that we're going after right now is say we're after the May or June. May. Well, those butts. Okay, soybeans. You can see the doji gap up. Now, if it comes up through this level, let me see if I can do this. Up through today's high. If you didn't buy it today, you can still put your buy stop just above this level. That would tell us that it's broken out with a strong buy signal, the best friend signal, at least looking for it to come up to the 50. And we had a few people trading the wheat contract, which has been working out very nicely. Started buying it right in here. Cannot see the tickers. I still haven't figured out how to get rid of the purple. I have to call them. Okay, so some of the stocks that we're in, we recommended EQ today because of this pattern. And again, your best friend, Doji Gap Up. So this one can still be bought with the expectation that it's going to come through this level and give us a wave the same magnitude as this wave right here. We recommended Montana. Now, Montana is going to be, this is MNTA, going to be announcing earnings, but it was still doing this going into closing. So the probabilities are that it's going to be all right. I say the probabilities. Obviously, last week we had this situation. Again, this was the probabilities, but now this is why when you see it not work, you close out as fast as possible and move on to something else. And what was it? See what the dollar is doing. Not much of anything. It may be basing right in here, which is where it based before, and we're right on the 200. So we're watching to see if it comes back up above the T-line. If it does, that means it's probably coming up to the 50, which would kind of correlate with this downtrending channel. So those trading the currencies start looking for the dollar to pick up strength. Whoops, I backtracked here, didn't I? All right, we bought LNTH today. Because it came down, came back up through the open, started trading up even above the yesterday's high, which gave us a little doji sandwich still coming out of this pattern. So that one's put us in the right direction. And the rest of them that we've got are just kind of steady eddies, as we can see in CC when it came back up through the T-line and then did a doji sandwich that broke out through this level. All of these, you pretty much, all you can do is just hang on to them as long as they stay above the T-line. DVMT broke out of its fry pan bottom with a kicker signal the other day. We're just hanging on to this one. EPZM. Big move, 45 degree. Prospect of a wave 1, wave 2, now going into wave 3. So a lot of these are going to look just the same, because when we get the buy signal, our next criteria is we just hang on as long as it doesn't close below the T-line. AXDX. BlackBerry, because of this big gap up and this big gap up, and notice what it's doing. It hasn't been able to not only close below the T-line, they haven't even been able to close this below the 3T line. Oh, CC reported after hours. Let's take a quick look. Doesn't show where it was. Yeah, it's not showing where it's trading right now. Anybody see where it was trading after hours? So when you get in a market like this and you've got a bunch that are moving, all you can do is just stay long. 41.55. All right, so it's popped up into this range. That's good. Where did I end off? Oh, this one we bought some and just haven't really had to pay attention to it. It's just been a slow, steady eddy up to the upside. So the reason the T-line's so effective, not only for telling you that you're in an uptrend, but if you've got 10 positions on and 6 of them are doing this where they're just staying up above the T-line, you don't have to do a lot of, what do I say, excruciating research or excruciating evaluation. Just got one simple factor. You stay with it as long as it stays above the T-line. RLGT. Did we just do that? That's why it looks so familiar. MMYT. Same scenario. Nice doji bullish confirmation out of the oversold area. You stay long. EXAS, when they break out like this, notice the kicker signal. What's our expectation? 45 degree after that. UCTT, 45 degree. AXTI, kind of a 45 degree. Again, with the added benefit of seeing the fry pan bottom breakout. Shopify has been acting well. There we go. You can see that there's a trend channel. And then you saw the Morningstar signal. So this is a case where if you closed it out here, you could have bought it back today on the positive trading, confirming the Morningstar type signal. And fuel just consolidated. So it's got to stay above the T line. Now, this is where your knowledge of what should happen after each candlestick signal becomes very vital. This should have been a J-hook pattern. It failed right at this level. So either we're at a double top or we're still heading up, but at a much slower pace on a wave 3. But we also have had a doji right here on the T line. And what's our simple rule of a doji? It's going to move in the direction how they open it tomorrow. So if they open it lower, close it out. Failed, and it's not heading up. If it opens positive, you stay long, but you put your stop right down here at today's low, just below the T line. It shouldn't come back down through that level. So knowing what should happen based upon your signals and patterns just give you that much extra, let's see, for stocks expecting a 45 degree, should we always expect a return to near the T line? Well, no, the T line, if this is considered a 45 degree, the T line will keep following up. So remember, the T line is telling you that, and especially the 3T line, telling you you're in a strong uptrend. You can stay with it. What you don't want to see is the 3T line coming back down through the T line. So right now, there's not too much problem with that. On the other side of the coin is you stay long as long as you don't see a sell signal and a close below the T line. First of all, a sell signal. Twitter, this one you can stay long if you got in it based upon the gap up. And then when you see a doji type day, what do we want to see after the doji? They're moving it positive. Kind of the same scenario with Amazon. Amazon, they gapped it up coming out of the fry pan bottom. What did we need to see today to confirm that the fry pan bottom breakout was in progress? We need to see it open positive and trade positive. What do you want to do with this one tomorrow in positive trading? You want to be buying with the expectation that wave 1 and wave 3 are going to be about the same. DZ, are you using the new password? What are some of your techniques for properly setting your stop losses? Jason, we'll do a stop loss one evening. But a lot of times it's trading back below the T line or a sell signal in the overbought condition. Or if you buy something on positive trading, you don't want to see it close more than halfway down the halfway down the bullish candle. On which one? On Twitter? Yeah, you have the prospect that if it opens lower, you're in the overbought area. Look where you closed today, right smack dab on the 200. So this makes it very simple. If it opens lower, you probably want to take profits because that's telling you they're failing at the 200. And then what's our next pattern setup that we would be looking for? Our bobble, where they bring it back down till the T-line catches up, and then you buy it back if it comes back up to the 200. On the other hand, if it opens positive tomorrow, it's telling us the 200 is not acting as resistance. You stay long. Now, what would be the reasons for thinking it might be going higher? Because look how it's gotten there. Big fry pan bottom full of dojis, a gap up, another gap up. I mean, those gap ups tell you immediately there is a very strong will to get back into the stock. It's usually going to indicate more upside. Let's see. We did Amazon. Some of the biggies also, like Apple. Notice what Apple's done today. It also gapped up through the high. Apple, I think, is trading at an all-time high. First target is more than likely this level, and then just see if it does a 45-degree off of there. Netflix. You can see what happened here. We had pretty much this trend channel, and then he did a best friend gap up through that resistance. What do we get from here? 45-degree. Tesla, fry pan bottom, broke out through this level. Where's our next target? Well, if this is wave 1, wave 3 should bring you back up here, which would also coincide with coming back up to that trend area, that existing trend. And NVDA, NVIDIA. This a little bit bigger. More than likely, you stay long, watch to see what it does right in here. Once it gets to that level, everybody else can see there's a resistance level. At that point, we'll definitely have been in the overbought condition. So it might be running out of steam. And then you see whether you get a sell signal up here. Okay, let's see. The fry pan bottoms. Montana is working. PTLA, another position we're holding because of the fry pan bottom. There's your dimple. This is the dimple from here to here. It's probably going to be equivalent from here to here, which means you're just about ready to break out. So this is, when I say you're just about ready to break out, this is what your timing element becomes dramatically improved. Because if this is the area that you're going to be probably breaking out, you can do two things. One, you can be buying calls near the close of a day that's pushing right here toward the breakout level with the idea that if they pop it, they're going to pop it big. If they fail, you're right back out of your calls. Or you can be a little bit more conservative and see if they gap it up. If you see they're opening up positive, you buy your calls immediately, knowing you've got a high probability you've got another strong wave in progress. That was on PTLA. Same thing with Boston Scientific. They're supposed to be reporting here pretty soon, aren't they? But this one came out of a big fry pan bottom. Notice how it broke out with a kicker signal. Remember, our trend kicker signal, just like a signal, is one of your Boston Scientific reported. Okay, that takes the worry out of that one. Let's see. EXEL. We're hanging on to this one. It's getting right about it to the breakout level. So that's one that you probably want to look at tomorrow. for a potential option trade, because this is the ultimate spot to be looking at a trade right at the breakout level. It tells you you don't have to be sitting around waiting for your timing to kick in, because you're right at the timing spot. Same scenario here on ALNY, another one that you can be buying on positive trading. CLSD, right here at the breakout with a nice fry pan bottom. Get a good hard pop. Oh, that's right. EXEL was up, showing it was trading higher after hours. And Amazon, same thing. This one is broken out nicely. DDC, Dominion Diamond Corporation. Maybe starting the next wave. VRX. You can see it setting up. You can be buying this one with at least the anticipation that it's going to come back up to this level, probably meeting the 50-day moving average. So even if it failed up here, if this fry pan bottom keeps working, you're going to be up 15% or so, even on a failed trade. Whoops. Oh. EXEL is up to 24.10. All right, so yeah, I saw it trading up here, which would be your gap out move. So even if it gaps up and you're in the overbought area, you'd be breaking out of a fry pan bottom, usually an indication that you're going to get a lot more upside. Let's see, PGNX. Nice little reversal. Bullish Harame, right smack dab on the 200 and coming up through the T-line. Just the probabilities tell you that is the time to be buying. What's your stop loss on this one? If you're buying on positive trading, you don't want to see it close back below the T-line, which tomorrow I'd imagine the T-line would be the halfway point of this candle. So if this is the candle that told you they were confirming that the bulls have taken control after a reversal signal, if it closes more than halfway down that candle, the Japanese rice traders say, yeah, the bears are still in control, close out the position. BCRX, same scenario. Look at all the dojis. Another one, at least a quick pop back up to the 50. Then you see what it does at the 50, but at least you're sitting in a positive situation when you make that next decision. SPAR, a bobble setup. Tells you if they open this positive, they're going up the same magnitude as this right here. So when you see something like this, notice your Morningstar signal came up through the 50, consolidated, but look where it consolidated, right smack dab on the 50. Now this is where the importance of moving averages help you out, especially when you're using candlestick graphics. You can see exactly where the support is. You can see exactly what human nature does. Comes up through a resistance level, sees if it's going to act as support. If it does, where's it going to move to? The next resistance level. What do we know about this little pattern setup? Oh, we hit a resistance level, couldn't close below the T-line. If it comes back up through, we've got a bobble breakout, which is just like a little J-hook pattern, but more refined in the sense that we can see where it topped out, where it supported, and where it broke out again. And CMRE, kicker type signal that broke out through this level. Anytime we can see that there's a resistance level, and they do a kicker signal through that, tells you there's a brand new dynamic in this trade, probably going to see a lot more strength. Oh, whose handwriting is this? No. How can you be that bad where you can't even read your own handwriting? Well, that doesn't make you want to kick your grandmother. Another little scoop type pattern. Makes this very simple. If it opens positive, you want to start buying, especially if it breaks out through here. Got a scoop pattern, consolidation right back to the 50. Stochastics turning up. You're probably going to have wave 1, wave 2, wave 3 taking you up another 10, 12 points. Rick, that's pretty much me. I kind of thing. I can't remember my second or third or fourth grade teacher that was teaching us handwriting. Oh, sorry for that lady. We made so much fun of her. Another little bobble breakout. There's your T-line crunch. This is very important in the sense that if they keep pushing it up indecisively and can't close below the T-line, that means the force is still there. They'll probably get this up through the resistance level, which means once it breaks through this resistance level, everybody and their brother has been watching to see if it's going to go through. When you know you have this type of setup, you can get in earlier before everybody else starts jumping in. And CFMS, same thing. T-line crunch, kind of a little bobble action, but they never were able to close it below the T-line. Now look what you got, a fry pan bottom, and you're just about ready to see whether they're going to break out. If they do, a pop back up to the 200 is going to give you a good 30, at least 25% upside. OCLR, these you watch. The bigger the signal, the more compelling there's been a reversal. So if you're buying this, obviously you've got a downtrending channel here and a resistance, but at least you may have a 10% pop just back up to the 50. But look where this long-legged hammer doji occurred, right smack dab on this support area. That tells you your probabilities of heading higher is pretty good. And ZYNE, another Morningstar signal, smack dab on the 50. Stochastics starting to curl back up and near the oversold area. And where was it doing it? Right on this support level. Where's your next target? The top of the channel. So again, these are kind of a trend channel setups. I remember a while back, can't remember how many years back, was somebody was advertising how you become rich trading trend channels. And they were just showing you the trend channel. We got a lot more clearer picture of what's happening at the bottom of a trend channel and at the top of the trend channel based upon the candlestick signals. All right, what else do we have here? That was Zine and ePay. This is your big reversal. Notice they gapped it down, took it down, and brought it back up. Now that alone tells you something. You don't even have to, if you just analyze that as a signal by itself, other than it's already a bullish engulfing signal, the fact that they were taking it down and then took it right back up again told you they wiped out a lot of sellers. There's probably going to be a very strong price move, and where? Probably back up to the existing trend channel. Okay, and that's about it. We're still short HPLC. And this would have been starting to look a little bit worrisome because you got a bullish Harami right here where it bottomed out before. You're getting in the oversold area. But after hours, it was trading down here. So if they break this down, it's telling you they're not supporting at this level. Now, what's the next pattern that we would recognize? Well, we saw it was absolutely failed right here. No, and it failed right here. So if this is wave 1, this is wave 3 of your bearish J-hook pattern. Okay, I guess that's about all I got tonight. Are there any general questions on candlesticks? Hold off your individual ones until I tell Jim to do the double line, and then just keep it as a maximum of 2. All right, Jim, go ahead and do the double line. Nugget had, I guess, a reverse split, but it's still in a downtrend. So we're still kind of anticipating it's going to hit this area because you're already in the oversold area. So you just watch to see if there's buy signals here. And JNUG, kind of the same scenario. It's gapped down through this level, more than likely coming to this level. Okay, Jim, I hope you've done the second double line by now. He said, drunk. We're watching this one. Had a little scoop type pattern. You can still buy this one on positive trading, at least with the idea they'll pop it up here and or here and or back up to this level. So you still got some good percentage upside on this if they ever get it moving again. So you definitely need to see positive trading. ALXN, stay long. You had a doji sandwich. I would suspect you're coming back up into this area at least. And GGP, big bullish engulfing. Now, got to take this all into an account. You're in a downtrend. So if you're buying on positive trading, you got to see if it can get through here, which is kind of this congestion area, and then see if it gets through here, which is this downtrending channel. But if you're buying here, you just watch to see what happens at your resistance level. Ballard Power had again, this is the opposite of that booster one that we just saw. They took it up and then reversed it back down with a bearish engulfing. That usually tells you there's now some booster force heading back to the downside. So if this opened lower tomorrow, I'd close out the position, anticipating it was at least going to come back and test the T-line, but we don't know if it's going to support there or not. This one did get back to the T-line /200 area with a bullish harami. It has to open positive tomorrow to stay in it. If it closes back below the T-line a second time or comes back down through there, you want to close out the position. And ANET, all you can do with this one is stay long. I don't know why we got lines all over the place. Just stay long as your steady eddy remains in progress. Kohu, this is a toughie. Now, when it reversed, again, where was the safest place to put your stop in this case? Well, you're up here in the overbought area. You saw exuberant buying at the top. You start looking for a sell signal, but your safety stop was right here where it opened. It shouldn't come back down through there. Now they've taken it back up. If you did close out, you can always buy this one now in positive trading. CCCR, you stay long. Just make sure your volume's good on this one. At this point, as a safety, these are tough to trade, so you don't want to see it trade at all back below today's open. So that's your ultimate safety stop. OCN, another one you can buy on positive trading. You had the gap up. So if it opens positive, you can be buying it and then just use the T-line as your stop. UCTT, nah. This one is now a hold. I wouldn't be a buyer here. You're a buyer somewhere down here or here or here for looking for this type of move. And so now you're up in the overbought area. You're not buying this one. You're now looking to see when to start taking profits. So because you see a chart that's looking good, if it's already made its move, you're looking for the ones where to be buying down in these type of situations. This one, you just stay long. You're in the 45 degree. That's CDXC. Stay long as it stays above the T line. STM. STM's that must be an overseas trader because it's so choppy. Right now, all you can do on this one is stay long as it stays above the T line. 3L, should have closed this one out. This was your fry pan bottom. This was your breakout. But you had a long-legged doji. What's that tell you about the breakout? It needed to open positive and trade positive. If it opened positive, where'd you put your stop? Right here, because if it came back down through there, it was telling you they weren't breaking out. So you had a left-right combo after a long-legged doji and opens lower. Not a good chart. Now, you might be ready to go short on a lower open, but then you'd have to see if it was going to support here at the 50-day moving average. BIIB. I don't know what the heck is wrong. Now that one's not good. You can see where it failed, and you can see what the trend is. There is no trend. Wouldn't be here. 22nd century. You can stay long on this one if you're in it. Just make sure your volume is hefty. EEM, you stay long on this one as long as you stay above the T line. Notice once they hit the 50, they gapped it up. Just stay long. CRBP, you can still be buying this one, especially if it comes up through today's high. You had your Morningstar signal, your Doji sandwich, or your McMuffin. I would suspect the first target's going to be the 50-day moving average. EAMS, no, you should be out of this. Now you shouldn't be in it. At best, you should be ready to go short on this one, especially if it comes down through today's low. Then watch to see what it does right here. But your stochastics are telling you your dumpling top could be taking you into a wave 3, taking you all the way down into this area. MX, that's a good-looking chart. Again, there's your trend channel. Next target should be up in this range. CBOI, nothing of any consequence yet. Yeah, nah. Nothing powerful there to make you want to jump into this one. And TRIP, you stay long, but you can see you're running out of steam on your stochastics. So this is a case where it probably wouldn't be unusual for it to come back and come back down to the 50 to see if it's going to act as support. If it does, then you know your next target is up here at the 200. Get ready to take some profits on weakness. Data, you can get ready to buy this one. That's a good-looking chart. HRTX. You're still stuck in this trend channel. So if you see that you're stuck here, you know where the breakout is. It's got to be above the 200. I wouldn't be long or short this one right now. I'd be waiting for it to get back up through the 200 and breaking out. AUPH had a good day today, but it still hasn't shown anything about breaking out, so I'd still want to see a strong buy signal confirmed to tell me that this whole congestion area is over. I'd still suspect it's going to move sideways for a few more days, waiting for the 50 to come back up and actually touch it. VEEV, just stay long. UT HR has to, if you went long on this doji sandwich, it has to open positive, because if this was the candle that told us they were breaking out and they closed it more than halfway down that candle, not enough power to tell you they're doing anything of any magnitude at this point. I'd close it out. These are tough. I have to wait for all the choppiness to get out of it. If you think it's going to bounce back up, it's still not a good trade. If you were short, I'd be covering the short position, especially if it traded higher. I wouldn't be doing anything on the long side with this one. EXTR, just a nice steady eddy. You stay with it as long as it can't close below the T line. VITA has to open positive. If it opens lower tomorrow and you got the potential of a doji, bearish doji sandwich, that's going to take you down through the T line, which means your next support level is down here, which means it has to open positive and trade positive to stay in it. SEMP, if this was the candle that told you the bulls were taking control and they closed it more than halfway down this candle, told you the bears are still in control or there's no bullish sentiment. If you stayed long, it has to open positive and trade positive. If it opens lower, close out the position. You don't have anything at that point. And CVRR, you stay long on this one, expecting a 45 degree. CNAT, another one where you just stay long. Nothing you can do here ever since the breakout, except stay long as it stays above the T line. You like to have a few of these in the portfolio because you don't have to think. Just watch them as long as they stay above the T line. So you put your stop, safety stop, below the T line, just in case something happens that slams it, you're out of the position. GSAT, same scenario, big fry pan bottom. Very simple rule of a fry pan bottom. Stay with it as long as it stays above the T line. YPF, that one's junky. You had a bearish engulfing signal after some selling. If it opens lower tomorrow, you shouldn't be long. I don't know whether I'd be going short, but I definitely wouldn't be long anymore. When you put on a trade, do you place a stop right away? Not necessarily right away, but I'll have a good idea of where it shouldn't be trading. Let's say I was buying this one and was trading up. I already know that at the end of the day, it shouldn't be trading back below the T line. Or I shouldn't see it trade at all back below the open of the previous day. So it's not that I put a stop on right away. It's I know where my stop will be when I put on the trade, because I'm usually sitting here most of the day. Unfortunately, I was just telling Jim that that's how I've gotten so fat over the years. All the years we've sat here in front of the screens. AAOI, you can stay long, but another one where you definitely need to see it open positive tomorrow. ITSE, it's the nothing. If you were in long, it has to open positive, but you're not going to get a whole lot of enthusiasm from it. So if you're long, it has to open positive, and then it shouldn't come back down through the close. That means the short profit takings over is still heading down. Kind of a meeting line here, but you're not in the oversold area. So ADI, if it opens positive and I was short, I'd cover the position because it's just telling us this area is acting as support. If you're short and it opens lower, continue to hold it because now you have a wave 1, wave 2, wave 3, which should take you down to the 200. CRM, stay long. MDT, stay long. There's your doji sandwich right at the breakout. That's a good looking chart. Oh, let's see. May 3rd on X. All right. Square. Another one you can stay long. With the anticipation you could be heading up to this level. Your stochastics always be in the direction of your price trend? No, not necessarily. Usually they're going to be because they're relatively fast. So what you want to do is when you see a buy signal, you want to see that your stochastics are at least coming back up. So very rarely, I mean, if you're in a situation like this, your stochastics are heading down, probably tells you don't have a whole lot of force on a reversal yet. It doesn't do you very much good if your monthly chart is bullish and your daily chart isn't, because you're buying the daily chart. Let's see, there's your weekly. That's not bullish right now. For all you know, it might be going flat. So one thing you don't want to do is try to find, if you're trading off a chart, your trades are off a daily chart, you don't want to go hunting around to see if you can find another chart that would agree with what you hope it should be doing. That was a nice little breakout. Stay long. At this point, I'd probably use today's low as a stop. We want to see it come back down through that level. Okay, still, I think this market is waiting to see what the prospects are of a health care vote and then the lower taxes. But I was watching another room today where I could tell two people were pretty much squabbling about the Democrats' policies and the Republicans' policies and what that was going to do in each case, or who was right or who was wrong. So I put a comment in there that there's two things that you can be assured of when you're discussing politics, especially in an investment chat room. One, whatever you say is probably not going to change the mind of the person that is arguing against you. And two, I've never seen one political commentary help you make a single buck in the market. So that's why we just kind of leave it alone. If you think ITCI got down big, check it at I don't know if I can go back. Yeah. Was that a gap down or was that a stock split? And SQ, yes, that's still a fry pan bottom. I wouldn't be afraid to be buying right in here. With the expectations, there's your next target. AMD down 10%. Yeah, AMD just didn't have a chart to, so once it got up here and did a bearish engulfing, if it's down 10%, that means it's down $1.30, so you're down in this area. This just didn't have a real great chart. Jason, I wouldn't buy a steady Eddie in the overbought area. What we're looking for is buying something at the appropriate time with the expectation or wanting to be in a steady Eddie. So you don't buy a steady Eddie because it's a steady Eddie. You buy based on a buy signal and then hope you get caught in a steady Eddie for quite a while. What might I say? Would you try bulletproof coffee? Lose weight. Oh, Carol, I don't even drink coffee. VRX. What was the question? Yeah, it could possibly fill this little gap. It's not a bad looking chart, especially with the morning star signal confirming. Am I using a weekly chart? No, still on a. That's the weekly chart. The daily. Are you using weekly chart? No, using daily charts. All right. Just have to assume that when they break out of a channel, another strong move. Break out of a channel, another strong move. So as long as you're above the T line, you can stay long or consider we're still in an uptrend, which again allows a lot of the fry pan bottoms to keep breaking out and give you the expected returns because there isn't any major change of investor sentiment in the overall market. Okay, let's call it a night. Let's see. On CDXC, there is a hanging man. How important is the hanging man in the stochastics? CDXC. You're not in the overbought area. So all this tells me is that they took it down. Remember, your signal is not a signal unless it's occurring in the right conditions of the market. So all this was consolidation and taking it back up. You're not anywhere near the overbought area yet. I would just stay long. All right, everybody, have a good evening. We'll see you bright and early in the chat room tomorrow. We'll see you then.